Welcome back to Investing Talk Podcast. Today, we're going to be taking a look at Mativ Holdings.
Okay.
You sent us some information, and we're going to be covering the company overview, recent stock performance, financial health, some potential red flags, and strengths, market sentiment, and a bit of technical analysis. Our mission today is to kind of break down all this information and give you, the listener, the most important insights so you can understand what's happening with this specialty materials company.
Sounds good.
So let's get started with just like a quick snapshot of what Mativ actually does.
Yeah.
So it was actually formed in July 2022 through a merger.
Okay.
And it kind of works in two main areas. They have this advanced technical materials segment and a fiber-based solutions segment. The first one focuses on things like filtration and healthcare materials,
Okay.
while the second one kind of serves the packaging and consumer product markets. And they deal in like engineered polymers, non-woven, specialty papers. It's a pretty diverse portfolio.
It is a pretty diverse portfolio. I mean, when they talk about like non-wovens for filtration, you can think of a lot of the materials that are used in face masks or air filters materials engineered for those specific tasks.
Yeah, that's a good point.
So that's just a small snippet of kind of what they do.
Right. So we have this picture of this diversified company and, formed through a merger. And it's been around for a couple of years now. So let's look at how the market has reacted to it.
Okay.
And particularly in the recent past, there have been some pretty significant shifts. Looking at the data you shared, it looks like over the past year, the market capitalization has dropped considerably from around $919.7 million in June 2024 to about $330.9 million by March 2025. So we're seeing like a pretty big drop there.
We are. And the current stock price is hovering around $6.09. Which is down over the last day, the last month, and the last year, which represents about a 65.16% decline over the past 12 months. That's pretty substantial.
Yeah, that is pretty huge.
That is a really significant drop.
What could be driving that?
Well, there are a number of different factors that are probably at play here. Obviously, the broader market trends always have some influence. But when you see a decline of that magnitude, over 65%, it really points to some factors that are specific to the company. And looking closer at some of the information you provided, it seems that investors are really concerned about the negative earnings that Mativ has reported over the past year. And this makes sense because, a declining market capitalization often indicates a lack of confidence in the company's ability to generate profit, both in the present and in the future. So it's not just general market trends. There's something more specific going on here.
Yeah, and if you look at the financials, Mativ's trailing 12-month revenue is $2 billion.
Right.
Which sounds like a lot.
It does.
However, they're operating with negative earnings over the past year.
Right, which is not good.
And it's a definite red flag, as you noted in the materials you sent. And just digging into the information a little bit further, it seems that the negative earnings are really being driven by two main factors. One is increased raw material costs in the fiber-based solution segment. And the second is integration expenses related to the merger. So, you kind of put two companies together and there are some costs associated with that.
Yeah. It's not just that the market isn't receptive to what they're doing. They're also incurring some costs that are impacting their bottom line.
Absolutely. But, there are some positive notes as well. Analysts are actually expecting adjusted earnings to reach $1.35 per share for the current fiscal year. So that's something to keep in mind. And the company is also aiming for $65 million in cost savings from the merger. So those are two potential positives. So my question is, how do these contrasting points balance out? Is the potential for future earnings, especially with these cost-cutting measures, enough to offset the current losses?
Yeah, I mean, it's a mixed bag, right? $2 billion in revenue does show that this is a company with a significant presence in its market. Yeah. But the fact that that revenue is not translating into profit, that is a big issue. And I think that the anticipated adjusted earnings and the planned cost savings, those are going to be absolutely critical for Mativ in demonstrating a turnaround. If they can successfully execute these cost reductions and improve operational efficiency, whether that's through negotiating better prices for raw materials or streamlining their merged operations, then yes, those future earnings could potentially help them compensate for the losses they've incurred and maybe even start to regain investor confidence. Right. But we have to remember that these are just forecasts. The real test will be in how they actually implement these plans.
Right. Okay. So we've talked about the kind of negative side of things. Let's look at some of the strengths here. You've highlighted that Mativ has a pretty diversified product range
Yes.
and that they hold strong positions in markets that are expected to grow, like filtration and healthcare. And their ability to kind of create these unique material solutions, that gives them a competitive advantage.
Right.
How significant are these strengths when we weigh them against the financial headwinds, particularly those raw material costs that you've mentioned?
Right. Well, I think these fundamental strengths, those are really vital for Mativ's long-term outlook. I mean, having that diverse range of products helps to protect them if any one particular sector experiences difficulties.
Right.
And holding strong positions in these growing areas like filtration, think of the increasing focus on air and water quality worldwide in healthcare. That provides a really solid base for future revenue growth.
Yeah.
And then you add to that their capacity for innovation, their ability to create these specialized materials, and that gives them an edge when it comes to pricing and customer loyalty. So while those strengths don't immediately erase their profitability challenges, they do represent really valuable assets that they can leverage to hopefully improve their financial performance going forward. And I think the key here is going to be how effectively they can use these strengths to overcome those raw material cost pressures that we were talking about earlier.
Right. So it's like, can they use those strengths to overcome the weaknesses?
That's exactly it.
Okay. So looking at the market sentiment, it seems kind of mixed. Analysts are predicting that earnings will improve.
Yes.
But valuation metrics like EV to EBITDA are higher than the sector average.
Right.
And then another interesting point is that despite all these negative trends, the stock actually offers a significant dividend yield of 6.34%. Now, this might be attractive to certain investors, especially those who are looking for income.
Right.
But what does this high yield signal in the context of, everything that we've been talking about? The declining stock price, the negative earnings. What do you think?
Well, a high dividend yield like that can definitely grab investors' attention.
Yeah.
But I think when you see it combined with a falling stock price and negative earnings, it really raises questions about whether it can be sustained over time. Because it could suggest that the market simply isn't confident in the company's ability to keep making those payouts in the future.
Yeah.
And as a result, they're discounting the stock. While financially healthy companies can certainly offer high dividend yields, for a company that's dealing with recent losses, it really creates uncertainty. And it might also be a tactic to try and, attract investors despite the stock's poor performance. But I think investors really need to carefully assess whether that yield is enough to compensate them for the risk of further price declines.
Yeah, that makes sense. Okay, so finally, let's touch on the technical analysis, which kind of paints a cautious picture.
Right.
While some consider the stock to be undervalued, Morningstar, for example, estimates a fair value of $10.45. The overall price trend has been downward.
Yes, it has.
We see that the one-month drop is over 30%.
Right.
And the year-to-date decline is also significant. So this begs the question, is the potential upside enough to warrant the risk, given the strong downward momentum?
Yeah, I think that's the million-dollar question for anyone who is considering investing in Mativ right now.
Right.
That potential difference between the current price around $6 and that estimated fair value of over $10, if that's accurate, it does suggest that there is some potential upside.
Right.
But technical analysis is showing a very strong downward trend, and those can be really hard to reverse. So going against that momentum, that carries a significant level of risk. While value investors might be drawn to that perceived undervaluation, the fact that the price keeps eroding and that the earnings are negative, I think that suggests a need for caution. And anyone who's thinking about investing would need to have a really strong belief in a Mativ's ability to significantly improve its profitability and overcome that negative sentiment in the market to justify taking on that risk.
Okay, so just to kind of sum up everything we've discussed today, it looks like Mativ is a company that has a really solid foundation in these diverse specialty materials markets, but it is facing some serious financial challenges.
Yeah, it is.
And those are reflected in its recent stock performance and earnings. And those challenges seem to be linked to integrating the two companies after the merger.
Right.
And also to the rising costs of raw materials. Now, while analysts do see potential for improvement, and that dividend yield is definitely attractive to some investors, the current trends and valuation metrics, I think they paint a really complex picture. And this raises a question for you, the listener. How do you weigh the potential for future growth in those cost savings against the current financial realities and market sentiment surrounding Mativ?
Yeah, how do you balance those potential opportunities with the very real risks?
Right.
Because this is a situation that warrants careful consideration.
It really does. And I think, um, as you're considering all this information, it's really important to think about those underlying strengths that the company has, as well as the very real financial hurdles that it needs to overcome.
Absolutely. I think getting a clear understanding of both of those, that's absolutely essential if you want to form an educated opinion about where Mativ might be headed.
Well, thanks for helping us unpack all that
Oh,
today.
my pleasure.
And to all of you listening, if you found this breakdown helpful in understanding Mativ Holdings, please consider subscribing to the podcast, liking this episode, and leaving us a comment. We always appreciate your engagement.
We do.
And it helps us to tailor future deep dives to the topics and companies that matter most to you.
It really does. Thanks for listening.
Thanks, everyone.
Bye.
Bye.